Today we will be solving the practical problems on income and expenditure account. How to prepare an income and expenditure account from receipt and payment account. We will be solving question number 1, the receipt and payment account of Hari Mohan Charitable Institution. Before solving the question, we must keep in mind the important things of income and expenditure account. Before starting the income and expenditure account, we should know that income and expenditure account is a nominal account. It does not record any asset and liabilities. It only records items of revenue nature of the current year. Only items concerned with the current year are included. Items relating to previous year or advanced year are excluded. Outstanding expenses, accrued expenses of the current year are included. Capital items are not included. Only revenue items are included. The left hand side is the expenditure side. Right hand side is the income side. First we'll write the name of the institution, that is Hari Mohan Charitable Trust, the name of the account and the year ending. When we prepared the receipt and payment account, we always started with the opening balance of cash and ended with the closing balance of cash. But income expenditure account does not take into account these opening or closing balances. So opening balance of cash is not included in income and expenditure account. We will start with question number 1. Receipt payment account of Hari Mohan Charitable Institution is given. Receipts are given, payments are given. Our current year is March 31st, 2015, and along with this receipt payment account, few adjustments are also given. So these adjustments we will keep in mind while preparing the account, and we have to prepare the income and expenditure account for the year ended March 31st, 2015, and we also have to take into account these 3 adjustments. So we'll start with the expenditure. The payment side of receipt and payment account shows the expenditures. First item of payment is furniture. Club has, trust has, institution has purchased furniture worth rupees 3,000. But this furniture will not be included in the income and expenditure account as it is an asset. Rather, it will be transferred to the balance sheet. The next is investments. Investments are also assets, so it will also be not included. Then next is advance for building. Again, it is a capital item, asset. This will be transferred to balance sheet. Next is your charities. Charities is given on the payment side. That means the trust and institution has given some amount in charity, so it will be included in the expenditure side to charity. The amount is 60,000 rupees. Next item is your salaries. 2 salaries. The amount for salaries is 10,400. That means salaries paid during the year is 10,400. But the adjustment says that salary rupees 1,200 are still outstanding for the current year. So because it is for current year, it will be included in the income expenditure account. 2 salaries paid is 10,400 plus outstanding for the current year 1,200 rupees. Total 11,600 rupees. Next item is rent and taxes, 4,000 rupees. 2 rent and taxes, 4,000. Again the adjustment says rupees 800 are outstanding for rent, so because it is outstanding for the current year, plus outstanding 800, total rent for the current year is 4,800. Next is your printing. Amount is 1,000 rupees. Printing amount is 1,000 rupees. So expenditures on the expenditure side, to printing 1,000 rupees. Next is your postage, 300. Again, to postage 300 rupees. Then next is your advertisement. To advertisement 1100. The adjustment says that advertisement outstanding current year is 200, so plus outstanding 200, total advertisement for the year is 1,300 rupees. Next is your insurance. Amount is 4,800. To insurance 4,800 rupees. Then next is your balance carried down. These are the closing balance of cash and bank which are not to be included in the income expenditure account. Now we come to the receipts. First item is balance brought down. This is the opening balance of cash and bank, not to be included in income expenditure account. Next is your donations. It is given on the receipt side. That means the club has received some donation, so it is income for the club. By donations 16,000. In the question, the purpose of donation is not given. That means this donation is for general purpose, therefore it is included in the income expenditure account. But if the donations are given for any specific purpose is given, then it is not included in the income expenditure account, but it is transferred to the balance sheet. Donations for specific purpose are transferred to balance sheet. General donations, as given in this question, is transferred to the income expenditure account. Next is your subscription. Subscription is a major source of income for any club. So amount given is 50,200. Subscription amount given is 50,200 rupees. So on the income side, by subscription 50,200. In this question, donations given are, the amount of donation given is 32,000 rupees. It is a general donation. General donations are transferred to income expenditure account. Donations given for specific purpose are transferred to balance sheet. But in this question, you can see in the adjustment, it was decided to treat 50% of amount received on amount of legacies and donation as income. That means 50% of donation is income, 50% of donation is capital item, or it is for a specific purpose. So out of this 32,000, 50% will be transferred to income expenditure account, and 50%, 16,000 rupees, will be transferred to the balance sheet. Now comes the next item, endowment fund. Because it is a fund, it is a capital item and transferred to the balance sheet of the club. Legacies. Legacies are the amount received by the club as for the use of the club for number of years. Legacies are received as a source of the income that belongs to the owner of the club, and it is not to be treated as an income. Usually it is not treated as income and transferred to balance sheet. But in this question it is given that 50% of the amount received on legacies is to be treated as income. So 50% of the amount of legacy, 50% amount is legacy's amount is 24,000. 50% comes to 12,000. So 12,000 is treated as income in the income expenditure account, and the balance will be transferred to balance sheet. Next is your interest on investment. Investments are assets and not transferred to the income expenditure account. So interest on investment will be transferred to the income side of income expenditure account. Amount given is 3,800. The adjustment says that rupees 2,000 are still due for interest on investment. So this interest on investment accrued is for current year, therefore it will be included in the income expenditure account, and the amount comes to 5,800 rupees. Next is your interest on deposits. By interest on deposits, and last one is sale of old newspapers. ₹500. So the total of income side is 85,300. The expenditure side is short by 1,500, which will be known as surplus, or the excess of income over expenditure. The difference between the two sides is known as surplus, excess of income over expenditure, that is 1,500 rupees. The difference, the excess of expenditure over income, is known as deficit and is transferred as by deficit, excess of expenditure over income. Now we will try to solve question number 2. Question number 2, question is given in the form of a statement. The items are given. You have to decide whether it is an income or an expenditure. Secondly, name of the club is not given. current year is not given. So income and expenditure account, this is the expenditure account and this is the expenditure side and this is the income side. First item given is fee collected, rupees 5,20,000. This 5,20,000 includes 80,000 for the previous year. Fee collected means it is an income. So on the income side, by fees collected, total amount collected is 5,20,000, out of which rupees 80,000 are for the previous year. Income expenditure account does not include any item related to previous or next year. So the amount comes to 4,40,000. Next item is fees for the year outstanding is 30,000. For the current year, the outstanding amount of fee is 30,000. Because it is concerned with the current year, we will include in the income expenditure account. So total amount will be 4,70,000. Total fees for the current year is 4,40,000. Collected 5,20,000. Minus fees for the previous year 80,000, that comes to 440, and outstanding for the current year 30,000, total comes to 4,70,000. Next item is salary paid, including 5,000 for previous year. Total amount is 68. 5,000 is for previous year, and salary outstanding at the end of the year, that means for the current year outstanding is 3,000. Salary paid, that means it's an expenditure to salary. Amount is 68,000 rupees plus outstanding for the current year outstanding at the end of the current year is 3,000. And paid for the next year outstanding for previous year, sorry, is 5,000 rupees. Total amount is 66,000 rupees. Next item is entertainment expenses, 8,000 rupees. So to entertainment expense, 8,000 rupees. Then to tournament expense, 25,000 rupees. Next item is meeting expenses, that is rupees 18,000. So on the expenditure side, to meeting expenses 18,000 rupees. The next is purchase of books and periodicals, including 31 for purchase of books. Total amount is 40,000, which includes 31,000 for books. Books are an asset for any club or library, so books will not be included in income expenditure account. So 2 periodicals, to purchase of periodicals, 40,000 minus purchase of books, that is rupees 31,000, will be included in the income expenditure account. Next is our rent, 15,000 rupees. The rent paid by the institution, to rent 18,000. Then next expenditure is for postage, telegram, telephone, 6,000. To postage, telegram, rupees 18,000. And donations received are 25,000 rupees. No information is given regarding these donations. That means it is a donation received by the club for general purpose. General donation will be an income by donation received, 25,000. The total of income side is exceeding the total of expenditure side by 3,23,000. So the difference between the income expenditure account or the excess of income over expenditure will be known as surplus. Excess of income over expenditure.